Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been an amazing week. We had a record snowfall down in Tassie. That was my backyard where we got a few inches. That was fantastic to wake up to. Louis loved it, and Henry, our Bernese mountain dog, was right at home as well. So I know plenty of you in Tassie got some snow. I hope it was enjoyable. Something a bit different in these tough times when we're all at home and we've got plenty of crypto news and macro news to get through. I would encourage you to really watch the whole video. I know there's some people that only like the crypto stuff and others that only like the gold and silver news. But these days, it's honestly so intertwined, guys, that it is all playing a role in where we're heading. It's really important to understand, and there's opportunity abound in all these different sectors. So, look, I know the majority of you do love it all, but I would encourage the rest of you to give it a chance when there's so much happening. So we do welcome a few hundred new subscribers again this week. Thanks to everyone that is joining us on this crypto journey. And I just wanted to take a moment to reflect because it's really all been going our way lately. And this is what I've been saying for a number of years. Gold, silver, Bitcoin, crypto, these assets are going to absolutely flourish in the conditions and the environment that central banks and governments are creating. And it is really starting to play out. Some people are saying, look, is it over? But guys, in the grand scheme of things, you've got to zoom out. There is so far left to go, and it's really just getting started. There's no light at the end of the tunnel about where this all ends. Now, I just want to remind people that we do have an online meetup. So this Wednesday night, I'll be tuning in live over video link to talk DeFi with some really cool projects. This is instead of the normal event that the guys in Sydney have. So there will be a link. Check David's Twitter. I'll put it on my Twitter as well, the link to register for all that. But pretty cool little meetup, I hope. Finally, we're continuing to add to our resources. These are all free on the website for your friends and family that are going down the rabbit hole. Guys, there's so many scams and just crap out there. That's why I've put so much time and effort, and we continue to hire more staff. We really want to have hundreds of resources. Every topic you want, you can request topics. Lately, we've had a lot of people talking about, well, where can I buy certain coins if they're not on my main exchanges? And how do I use MetaMask and Uniswap? So we really want to have all bases covered, be the one-stop shop for absolutely everything. That is all free. And then obviously, if you want our premium research and to get all the inside tips and news first before anyone else, we have our premium service, which is only $49 Aussie dollars a month. So we do welcome 130 of you into that again this week. We're getting up towards 3,000 members. It's all functioning really smoothly because of those systems that we've put in place. All the welcome material and member directory, please read those and use the search function. And we've now got a few dozen people onboarded into the Nuggets News app. So the good news there is that it's going really well. Very few bugs because we've got brilliant software developers. So look, hopefully we'll have more and more news to share with you in the coming weeks, and then we'll be able to open that up to everyone very, very soon. Now, our members report did go out in the last few days. 5 of the most innovative and interesting projects or protocols out there. And I know you guys are absolutely loving these reports at the moment. Similar reports cost $5,000, guys. So look, $50 a month. I know so many of you, basically all of you, keep telling me that you're paying off your membership. So I just want to remind you that the team and I do work really long, hard hours, 100 hours a week, but it is a passion of mine. I do try and have Monday off. That's my day with Louis. And especially tomorrow, guys, I do have my pa's funeral. So I will be out of action all day tomorrow. All right, let's get into the local news. So Victorians face a $5,000 on-the-spot fine, really cracking down for anyone that breaches these isolation orders, because a high percentage of people just are simply not listening and going to other states, going to McDonald's or whatever it is, and you just have to stamp this out early. Now, I'm going to talk about the other side of things because a lot of people are still saying, well, it's not that bad, and we've got some more evidence out of Sweden. You guys know that I remain data-driven and open-minded, and I'll tell you the truth, and if I have to admit I'm wrong or change my mind, I want to give you guys the best, most up-to-date information, but I continue to talk to the doctors and researchers that are friends of mine on the front lines when it comes to COVID. In terms of businesses, we know that they're getting smashed. A lot of small businesses that tried to get across that 2-3 month period and the bridge the government kept talking about, they're not going to survive this second lockdown. And this is now being covered globally in terms of what's happening in Australia. This article is even linked on Zero Hedge. Now, Martin and I did our in-depth dive into the economy and housing market, so I'm not going to talk about that too much. I guess a big thank you again for people that are sharing that. As I mentioned in the video, this segment used to get 50,000 views, and YouTube's algorithm is now suppressing that so people can't find it, and it gets about 20 or 30,000. So look, please share that with your friends and family. We want to get all this accurate information and data out there, and I think everyone is interested in what's happening in the housing market and our banks and the economy. A few things that I did just want to mention though. A lot of people and governments in particular are still really worried about this blowout and how much Victorian economy is really the hub of a lot of other states. We know down in Tassie, all that traffic has to come through. New South Wales, a lot of holiday tourists are based in sort of Victoria when they come from overseas and then go from there. So farming in particular, look, it really is hurting the nation. I really hope Victoria can get past this very soon. But one thing I really want to drive home is this idea about people withdrawing from their super and government being really reluctant to sort of pick up the bill. And Paul Keating's chimed in here, every dollar which comes out of young people's super balances, it's one that could have been funded by one press of a button on a computer at the Reserve Bank or the Federal Reserve in America. And this is the current debate around modern monetary theory. When someone loses their job and they've lost $1,000 a week, is it really that bad if the government supplements their income? That's not going to cause inflation, and it's not governments being greedy and spending on everything. It's just picking up the difference, and that is where I'd love to have a debate with two different economists, which we'll get to in just a second, about monetary theory, because it is now starting to be discussed as a reality in several countries. And when you look at government bonds, I'm going to drill right into this in the US segment, but Australia issued these Corona bonds, special bonds, so 31-year government bonds, massively oversubscribed. So they only sold $15 billion worth, but there was $37 billion worth of bids, so they could have actually sold more than double. Now, when you think about this sub-inflation yield, so only offering 1.75, that's way bigger than what you can get now in the US. So there's still a lot of appetite there for investors. But when central banks are talking about targeting 2 to 3% inflation or even going more aggressive, you're almost admitting that you're losing money. Everything else should be going up around you 2 or 3 or more %, and yet you're committing to this over 30 years. So that's kind of the environment we are in at the moment, where people are so worried about what's happening around them, they'd rather the government hold their money. They're almost saying that's less risky than giving it to banks in Europe, for example, where they're really worried about the banks. Now, the debate I'd love to see is between the kook, who's been hypercritical of MMT, and one of the guys I regularly talk about, Alex Joyner. So he did say that he's not actually a proponent of it, but he is open-minded to it. And as I sort of said to him, well, I'm not an economist, I'm entirely self-taught, and I'd love to, moderate a debate between you two, because it's a little bit like in the crypto world and the maximalists. It doesn't seem like we can have a mature discussion about this between people from two different camps. So look, if you guys would like to see that, stick at the kook, stick at Alex Joyner, and if you've got a connection there, I'd love for you to put me in touch with them. So some more data that we saw. This was in terms of the people that are receiving current government support in one shape or another. So 55% of our 6 million mortgage holders are getting that support. So in theory, if they end all that support, they need to find a higher paying job within 6 months. Now, I'm not sure about all they will default. Maybe they'll be more stressed, but this was something that Alan Kohler put into print, and it really got headlines everywhere this week. So look, I think it was slightly over-exaggerated, but these are big numbers in terms of the number of people that are being supported at a time when they're talking about winding back that support. Another stat I really thought would shock people, 1.3 million negatively geared investors. So once you stop, getting that capital gain, or it's really hard to service the mortgage, banks are really tightening down on who they'll refinance, and it's not about your assets anymore. They don't care if you've got 20 properties. They're actually now more worried that the properties will fall. So it's about your income and ability to service the loan, and that is really changing that, flipping property attitude we have in Australia, where put down as little as you can because everything only ever goes up, and then sell it to the next highest bidder in a couple of years. And that's where we might see a lot of forced sales in the coming months if this continues. Again, a great tweet from Alex here. The poorer underclass, if we don't reform the economy, that just goes back to everything I've been saying for years since we made that documentary. We need to have money going into science, innovation, healthcare, not into building more houses, digging more rocks out of the ground, and speculating, on the banks, how big the banks can grow in terms of a percentage of the ASX. And unfortunately, banks are not willing to lend and speculate and take those risks. They just want to try and keep the property market propped up and get their yields there. So gold's nearly $3,000 an ounce in Australia, and this is with the RBA being one of the least aggressive central banks. So yes, they have been one of the first to say, well, we're going to do the old yield targeting, yield curve control, but they haven't really had to step up to the plate and print a lot of money. They haven't had to defend the yield curve at all. So at 2,800 and something an ounce in Australia, just imagine if they do have to start printing, or if the property market gets into a lot of trouble and they've got to end up buying a lot of mortgage-backed securities and taking assets off the banks. This is where the printer would go brr and the Aussie dollar would go down, and gold could go to $3,000, $4,000, $5,000 an ounce. Now, in the short term, I'm going to talk about at the end of this section how I think gold and silver have run very hard, and we normally have corrections. But I think the party's just getting started in a lot of countries when the currency wars heat up. All right, so mobility trends, they've now really surpassed the baseline in these different countries from pre-COVID. So it's certainly clear that COVID's not behind us, and case numbers are still trending higher in a lot of countries, but it's clear that people are out there and traveling and walking or driving, and they're no longer in that sort of fear lockdown mode that they previously were. Now, this was the article that I did want to get to. So this is all about Sweden and the public health. I read an article by a doctor there who was saying that he's really not seeing any cases anymore. He doesn't necessarily believe in the herd immunity. He's more leaning towards the fact that our T cells do have the ability to fight this off in healthy individuals. Now, in somewhere like the US, where we've got high rates of diabetes and people that are overweight, heart disease, maybe they don't have the ability. Maybe it's a fine line. We don't know yet, but it is interesting to see this data, and the mortality rates aren't that bad in Sweden compared to other places. But we need to be careful because it's the morbidity rates as well. And we're starting to see second waves, as I mentioned last week, of chilblains, heart attacks, strokes, clotting disorders, inflammation cascades, and they're the sort of things that we don't want to have, hospitals overwhelmed with those. So look, maybe some surprising, promising new data. I'll remain open-minded. I know some of you have already made up your mind, but I did want to share that with you. In terms of the US and China, the tech wars continue to heat up. So Trump's announced this TikTok ban, and it's just maybe a sign of things to come for the internet and the trade war. Without getting into the crypto news too much, this is exactly what Ethereum and other ledgers are trying to build, a new censorship-resistant protocol so that apps can't be just banned one day, or all your videos on YouTube can't be removed one day, or your Twitter just removed. So that is what these, world computers or Web 3.0, you hear these terms, that's what it's all about, which we'll get to in the crypto section in just a second. But look, China did push back and saying that this isn't the old smash and grab. We had word of Microsoft possibly launching a TikTok clone, Facebook's Instagram launching their own as well. So this is going to cause a lot of friction. The US often talking about China stealing their tech IP, and now this is happening. It's certainly not friendly or getting better between these two, and the White House also moving to delist Chinese companies from American stock exchanges. That's an important part of capital formation in China as well, and recognition and investment on a global stage. So a lot of these companies like Tesla, China want to knock them off the perch. They want to be the most powerful, largest producer of electric vehicles in the next few years. This is where it's going. And competition's good. Hopefully you and I get better, cheaper electric vehicles in the coming years because of all this. But there's obviously a lot of downside as well when the two biggest economies are not just competing, but actually, really not getting along, tariffing each other, the cost of goods rises, and we're going to get to all that inflation stuff in just a second as well. The US and China are set to review the phase one trade deal. So in a lot of those things like agricultural goods and energy, China weren't able to meet those, I guess, benchmarks that they set. A lot of that was because demand was down with COVID, but this is something that you just need to be aware of. And China and Russia continue their move away from the US dollar, from the SWIFT system, trying to build toward a new financial alliance. It seems like every week there's a new piece of news about how trade is being settled in non-US dollar terms. And look, the US dollar is weakening at the moment. That's a big part of what I want to get to next. So in terms of the US dollar, we've now got a warning from Fitch talking about possible re-ratings and all this stimulus. You might have that currency downgraded. Look, in terms of the world reserve currency, that's not as bad for them as it is for another country to get downgraded, but it's just these death by 1,000 cuts, and that's what we're starting to see reflected through in the charts. Now remember, the US dollar's been weakening over the past few weeks or months now at a time when the Fed's balance sheets actually been rolling off and shrinking. So they haven't just been printing into oblivion and weakening the dollar like a lot of people maybe think when they see that the dollar's going down, because the headlines say that, the Fed are printing so much and governments are spending so much. But this was the big headline that I think is a game changer, that a lot of people, your friends, family that aren't into all this stuff, this is about to change their life if the Fed and other central banks go down this path, but they're just oblivious to it. So if central banks make a major commitment to ramp up inflation, remember, they've been trying to get 2 or 3% inflation because they think that's a healthy band or growth rate for years, and they're often below it and they miss it. Now in Australia, we've actually had real inflation at 6 or 7% a lot of the time. It's a different story, but if they aggressively want to go after inflation because they're so worried about deflation, the thing that scares me is that they'll get it, but in all the wrong places, because the system, that sausage machine that you often hear me talk about, they're putting all this mince into the sausage machine and wondering why it's all coming out in the wrong ways, because the economy is so lopsided, and it just generates inequality. And pushes up asset prices, food prices, but it doesn't go through the wage growth and that sort of healthy inflation for everyone. So look, I know most of you guys understand that if you've been watching all my videos. If you haven't, I'll always link the important macro videos down below. So look, the massive inflation could be coming. They're sort of cornered themselves into this end game. You know the story, 100 trillion in promised liabilities. Debt has been growing way faster than GDP, than the economy, since 2008. And it's getting to the point where it's no longer just $1 for $1 of growth. It's $2 or $3 or $4 just to get $1 of growth. And if you think about that like finding oil, it's no longer the point of going out there and trying to find oil if it takes 4 barrels of oil to find 1 barrel of oil. And that's where we're getting to in terms of the efficiency of what the Fed are doing and trying to stimulate. It just doesn't stimulate anything. So implications of the Fed's balance sheet growth, they might have this enormous balance sheet, but then the bonds are going down. Maybe the stocks are going down. And it can get to the point where the Fed are insolvent or underwater. Now, they can always print more money out of thin air, but it's, well, what is that money worth if they have to keep doing that? And that's where other countries are starting to be really cautious and worried about, well, what is the dollar worth? And it's all relative and comparative, but markets are trading on sentiment. And at the moment, the sentiment towards the dollar is not as good as it once was. When we look at the labor market, the second highest reading we've had, 32.1 million people there. This is the dollar index and the number of longs versus shorts. So commercial net short position, we can see that there's a lot of people that are still long dollars, and we could have a long squeeze to the downside when we take into account all the different currencies and futures contracts as a percent of open interest here. So look, I think it's a different scenario from the retail and the public and the media cycle compared to the positioning that we see here in the commercials and their net short positions. But the dollar is now the most oversold in 40 years, and Morgan Stanley, some of these big banks have exited their short positions. But if you look at these headlines, this is what I think I mentioned last week as well. All of a sudden, you've got crypto YouTubers and influencers and that on Twitter. Everyone's talking about how the dollar's going down. Well, where were they, months or years ago when it was at all-time highs saying that it was going to go down? Now that it's the most oversold it's been in 40 years, that's when they're getting bearish. And that, to me, is normally when you've got to be a bit of a contrarian and there's probably a bounce coming. If we get that bounce, everything that's denominated in dollars, like our gold and silvers and bitcoins, even stocks, that's when we could possibly roll over. But I'll get to that at the end. So when we have a look at the Treasury market, this is the outstanding amount of the T-bills. You can see that that's jumped from around 2.5 to 5.5 trillion this year. And the Fed have had to pick up a lot of that. So this is the Fed holdings. You see that 3 trillion or more in treasuries, but also mortgage-backed securities. So that commercial property market, like I mentioned in Australia, this is what the RBA may end up doing, buying a lot of these mortgage-backed securities or corporate commercial mortgage-backed securities because they're packaged into these funky real estate investment trusts or CLO, collateralized loan obligations, because they pay out a high yield, and we're starting to see the high default rates. In terms of individual employment, $600 unemployment boost, that's gone. So some people are now left with $5 a week. Almost 30 million Americans didn't have enough food to eat last week, similar to the unemployment numbers we saw. But not only that, the price of groceries is skyrocketing. And obviously it can't come at a worse time for the majority of Americans that have lost their job or earning less. But remember, all that money printing is one thing, and that can cause inflation. But Farmageddon, what happens if all these farms and bankruptcies? The stats about the average age of farmers in America is shocking. I think it's in the 60s, and there's just not that next generation of young people that want to work out in a rural area with no friends around them and social life. So I think farming is just such a huge opportunity for technology, innovation, and it needs a facelift, because otherwise things like this, little independent farms, are going to go bankrupt, and it's the people that they supply that make all the money. And that's just another example of how the pyramid's upside down. The people that do all the hard work are just not getting any reward, but everyone needs food. So when we have less food, farms are going bankrupt and they're just printing more money and going to start giving it out to everyone. That's where we get things like hyperinflation in other countries, and you see the shelves are just constantly empty. So US consumer credit has risen for the first time since we've been in the crisis. That's surprised a lot of people, but it's probably a result of what we just spoke about, that people are having to put food and clothes on credit cards rather than a good thing, rather than a confidence, we're going out and spending more. And one thing that we actually saw was banks are really cutting back. So banks are cutting people's credit card limits or scrapping their accounts altogether. So that is not that positive environment when they say, this is great, we want people to spend more, let's increase their limits. They're really worried that people are now putting stuff on their credit card that probably can't pay it. Not only that, when we look at the numbers about the delinquencies, whether it's student loans, household loans and balance sheets, auto loans, these delinquencies are all dropping, but that's just because they kick the can down the road. As you see here, how many of these late mortgages are now cured? Well, it's just because they've put everything on ice. So that's all well and good to do for the short term, but you can't do that forever. And banks themselves, they've got costs and staff to pay, so that's just eating into all their revenue. So look, hopefully you guys are understanding that and putting all those pieces together, but I don't think we can just keep doing this for another 6 weeks or another quarter. We're going to have to let things, default sooner or later. So 2 ex-Fed officials are talking about the faster way to distribute money in a recession, and this is exactly what I've been talking about in terms of the Fed wanting to launch their own digital currency and get people to download the Fed app and inject Fed coin into their own accounts. So they bypass the banking system and bypass the government. And that is taking power away from banks, and that's not going to be popular with Jamie Dimon and JP Morgan if they're not making money off all the Fed printed reserves and that type of thing. So again, tensions are rising and everyone wants to be, the hero, print that money. And I know Trump certainly wants to as well. 100 executives are warning Congress of these catastrophic consequences without more relief for small business. They've been the one, sector that was really reluctant to go into more debt and borrow that money that was printed and given to the banks, but it's just sitting there as reserves. And just last minute before recording this, a couple of hours ago, Trump did actually sign a bit of a relief package because the talks in Congress did break down. So look, a little bit of relief. I think it was $400 down from the $600. I really think he's going to try and swoop in closer to the election with a trillion or multi-trillion-dollar spend to try and appear like the hero, I guess. And it all depends on what's happening in the polls at the time. The last thing he'd want is probably doing that and then getting voted out and then everything going well, and Biden can claim that it was his victory. So look, a lot of dynamics in play there. I did think that this one was funny though. This was from exactly 8 years ago when Trump said the Fed shouldn't be doing more stimulus. We can't keep spending our children's future away on waste. So just about every president in history says one thing and does another. I clearly remember when Obama said he was going to halve the national deficit and he doubled it. So look, not picking on Trump, it's just about every politician. And that's why trust in politicians is gone. There's actually a really good talk during the week from Commissioner Hayne that did the Royal Commission. And he spoke about how trust in institutions and all that's just been lost. And that's so apparent with COVID, how no one is listening to their politicians. Because they've just, I guess, bullshitted everyone too many times. Okay, so oil, natural gas, those productions are falling off a cliff. This is something that I clearly outlaid for you guys in the energy sector video I did on the whiteboard, talking all about how lower prices are going to really trigger this collapse in junk bonds. And that's where we've seen the Fed had to step in, print money and buy all those junk bonds. But interesting new legislation now being proposed that would even help commercial property. So it's that CLO sector like we just spoke about, where they're trying to make it easier for people to fund those mortgage payments, defer them, whatever it is. They're really trying to bail out that big commercial property sector. So over to Europe, where even the ECB are buying the debt of the non-EU companies. Something I have spoken about a fair bit on the channel is money flowing to wherever it's treated best. And look, even Westfield has got £600 million from the ECB. So look, money going to wherever. And a lot of the time, the US is the best place to park that. So look, even though there's all these defaults, none of that really matters anymore because it's just this funding frenzy by the central banks. Big tech, they're some of the biggest, I guess, holders, all the different central banks around the world, and they're cashed up. They've been going on a shopping spree and buying up all these other businesses that are going bust and brushing off all these antitrust scrutinies and being called in front of Congress and whatnot. But people like the Swiss National Bank, they are just printing money to continue to buy all the stocks. So look at their largest holdings. $6 billion of Apple, Microsoft, Amazon, Alphabet, Facebook, ECB, Swiss National Bank, whoever it is, they're printing money out of thin air to buy more stocks. And it's flying to the US as long as they're the cleanest dirty shirt in the laundry. So is it really any surprise that the private sector financial assets have gone from, traditionally sort of around 3 to 1 in this band here, they're now over 6 to 1. And there's just that financial economy has just become a behemoth compared to the real economy. And that's why at some point you need to get money into creating new businesses and jobs. You can't just keep pushing up the price of stocks and pretending that is going to make everything better. But for the time being, that's what's happening, particularly with all these Robinhooders and day traders that are jumping in and moving stocks all over the place. A lot of the fund managers are still really wary. We see that insiders are continuing to sell. I think Jeff Bezos sold something like $3 or $6 billion of his own stock just this week. And we see the smart money, the US domiciled funds, they're offloading their equities, their shares at these record prices, and they're just rotating into fixed income. They've made their profits. They're just trying to get a bit of a yield on those now. When we have a look at the global equity ETF funds, we see that emerging markets, people taking money out of there, people taking money out of Japan as well. Europe trending sideways, America mostly sideways as well. When we break it down into this individual components there, the most of the money is flowing into the bonds for that yield and commodities, gold, silver, copper, lumber, everything basically going up there. And a lot of money that was on the sidelines, those trillions of dollars I spoke about, is looking for a home and going into whatever is not overvalued. One thing I want to mention here that's really important is this correlation between the dollar and the S&P 500. So money's got to flow into America to go into US stocks, or at least into US dollars first. So if the US dollar really weakens, that might be that reason where people will say, you know what, I'm going to take a bit of money out of the US and out of the stocks and the bond market. So something that's really important to understand, it's all interconnected. If the dollar drops, we could see the stocks drop as well. The bond market is really giving us that hint that they're not buying this rally. Normally, these two should be tightly correlated in terms of bond yields and the price of stocks when we overlay those, particularly the inverse. When we look at emerging market debt, US dollar denominated, we see that those yields have really dropped. So emerging market bonds, 8% when everything was scary, and now back to record lows in terms of the yields that you can get even on the emerging market bonds. So when we look at the different asset class and what they're telling us, it's very clear, as I just said, that bonds are pricing in the recession and stocks are just completely ignoring it. And then we've got, high yield debt and credit sort of somewhere in the middle because the Fed are manipulating all these different markets. This is probably the most important chart that you need to understand. It continues to be the gold price versus US bond yields. Obviously, if we invert that, these overlay and correlate extremely, extremely high. But when we look at the record low yield, it's no surprise that gold is now at a record high. This was a great chart shared by Mark, who is our graphics designer at Nuggets News. And I hadn't seen this one before, and I didn't realize it was to this extent. So when we actually look at the inflation adjusted numbers, we've only just gone to the 2008 peak in terms of the stock market. Divided by, this is divided by M2, that money supply. So when we look at, how much money is being printed, I think I've spoken about this before. If we go back to the top of the 2000 crash, you'd say that, there's a lot more money. We could almost double from 0.18 to 0.33 in terms of where we can go and what would be normal. And there's a lot of money that can go into gold, silver, and crypto as well that's just sitting on the sidelines. So similar for gold, inflation adjusted, we're not even to the 2012 peak yet, let alone way back to the 80s. This is why I really do think gold is probably going to get to 2,500 this year. I think that's still on the cards, maybe after a little bit of a pullback. But hedge fund positioning, look, a long way off their record highs. They've got room to increase those. Yes, record funds are going into all the ETFs. We know that. Silver's just had its best month in 40 years. Again, going back to sentiment, can you remember when everyone was telling you that silver's dead and whatnot? And I thought that the monetary premium was going to play catch up. And that video, crazy to think that SLV, when we spoke about taking advantage of the paper price of silver, $13, and here we are a few months later. Silver hit $28, $30 US this week, but when we look at it in Aussie dollars, I just wanted to share my story because I bought basically all my silver back here when it was around $26 an ounce, and I was underwater and at a big loss for a number of years. And it's funny how just all of a sudden within a month, and this is another example of where things can happen slowly at first and then all at once, and you don't want to be a day late or a month late or have your day off to go buy gold and silver and they've sold out or the queue's too long. Being prepared, whether it's supermarkets that are running low on meat now, hopefully you guys have really heeded all these messages I've been drilling into you for years now, and it's just fantastic feeling that you guys are doing well. Everything we've spoken about is playing out, and we've just got such a long way to go. When I did this video about the beginner's guide to gold and silver, this is also a written format on our website for free if you're interested in this. But the low percentage of assets that fund managers have to gold and silver, whereas in typical portfolios throughout history, this has been at least a couple of percent higher in times of crisis. So that was one of my reasons that I said gold can still go up 5 or 10 fold, and silver's got way more potential than that. I honestly think if they couldn't keep the price of silver low with futures and paper contracts, silver's like a crypto, like an altcoin, and there's trillions of dollars I hate to sound like some of those pushers on YouTube that say $600 silver, but if you crunch the numbers, like these are the things where it would possibly be in a fair priced market. But maybe I'll leave it at that. If you do want individual stock picks, Marin is the guru for that. So we've got the discounts with all his reports. We've got some precious metals reports as well in our community, guys, in the units section, more education focused, and some Aussie stocks there. In terms of the ETFs, you guys know that I continue to talk about those. eToro, I've got zero fee trading as well. So still running that $100 Bitcoin bonus. If you're interested, they've got the products to get you exposure to gold, silver, metals, miners, all the things that I continue to talk about and make the educational resources on. This chart was really interesting to me. This is the $1,200 stimulus checks in the US. Now, the last time this went out, we saw a huge spike in Bitcoin purchases worth $1,200. This time around, we got a bit of a spike in Bitcoin, but it was more Ethereum as well. So look, nothing really registers there. It's harder to measure the gold and silver purchases. But I wanted to put this in the macro section rather than the crypto section because it's an important, I guess, notion or action that the Fed are now almost indirectly monetizing crypto or gold and silver, whatever it is. People are now saying, if you're going to print money and give it to us, we're not going to put it in this other system. We're going to put it in this new system, our system, something that we think is fairer and more scarce. Apple can print more stocks. The Fed can, or the government can print more bonds. The Fed can print more money. People are now saying, well, I'm going with gold or silver or Bitcoin because that is scarce. Really, really powerful stuff. Wrapping up the macro section here was a prediction I made that Day Trader Dave would bring his army of Robinhood traders over to the crypto markets because the assets are more exciting and they move more and there's more gains to be made. And this week he actually put it out there. The Winklevoss twins are going to educate him on Bitcoin and crypto. They've got multiple coins on their exchange, so it's not just going to be a Bitcoin maximalist thing. And this is really, really powerful. If Dave, who's got millions of followers, starts to talk about different alts and whatever, this can kick off a massive, massive speculative bubble in the crypto space. Right, so I just want to wave the flag at a little bit of a warning. Just like I said with the dollar, when everyone's on one side of the boat, look at these headlines. A lot of noobs piling into the gold and silver space. That's when I'm more likely to take a bit of profit off the table and just be a little bit cautious. You've seen the charts when they go parabolic like this, time to be cautious. I did a big write-up for members about this RSI. This is the silver chart here. This is the gold chart. RSI overbought. Just about every time in history it's led to a pullback. And this is the stock market where we've also got bearish divergence. So guys, if you want to read that right up, just go to the group and click on the nugget tag and you'll see all my most recent posts. Alrighty, let's get into the crypto news. So engagement has been through the roof. It's starting to feel a little bit like 2017, but I don't think we've seen a huge wave of new people come into the space yet. It is exciting for those of you that have positioned your accounts well to get messages like this. People that were down 95% and then started following our videos and education, as well as the chart guys, a partner of ours, and getting into profit so early into the bull market super cycle. These are the sort of stories that I love to hear. So well done to any of you that have done the hard work and are now, I guess, getting the rewards. One thing I just wanted to mention quickly, a lot of people ask me about crypto.com and some of these other companies. Some people were saying that when they get these bonus CRO tokens, it forced them to restake for 6 months. So look, I don't know if this is a red flag or everything's fine. All I want to say was never invest too much in these platforms. A lot of the time when you go to withdraw, you might find that there's a delay and you might need the money urgently. I'm not saying it's a scam or anything like that, but just be careful because often in the crypto space, when people are putting measures in place to slow withdrawals, it can mean that something is going on. So it could be nothing. I've really got nothing against crypto.com, but just be cautious, guys. I think sometimes people put all their money in these things and then they realize when they need the money that, it's going to be a 7-day delay or I'm locked up for 6 months or whatever it is. Don't put yourselves in those awkward positions if you need the cash. Another positive announcement here from Traveller, adding 1 million more holiday homes you can book and pay with crypto. These guys are partnered with Travel by Bit in Australia, so it's awesome to see that sort of real world adoption. Binance have been a big supporter of theirs as well. And one thing I want to mention is these IEOs that are on a tear. Now, they've got the most marketing awareness, the best market makers on the exchanges. And now that they're pumping, I tweeted out during the week that I've got no doubt all the IEOs and the promotion is going to start. So look, be aware that there is a cycle where influencers get paid to promote these, exchanges and market makers get paid to push the price up, suck more people in. And look, I'm not saying there can't be great projects out there, but you need to be aware of that cycle and not be getting sucked into it and buying the top. So look, I put to the community about if you'd like to see an episode called Nuggets Grill, where we actually ask these projects tough questions. Interestingly enough, the first IEO on Binance is from an Aussie project called Sandbox, and Aussies aren't allowed to participate. So CZ did say to me that this is just a one-off. It's sort of a regulation thing. That company has just chosen to exclude Australians. But I might make that the second episode, if you guys are interested in having Sandbox on. They're a gaming project. But this was a really great interview. Sam is a smart guy. You guys know I love FTX and their ability to execute. Serum is not one that I'm investing in personally, because look, if there's anyone that can do it, it's them. But I just see there's so much competition. So, Litecoin launched on P tokens. There's so many different bridges out there, Thorchain and Rune, decentralized exchanges, decentralized perpetual swaps on dYdX have launched. We've got decentralized derivatives and options raising more funds during the week. FTX themselves have been one of the biggest minters here of wrapped Bitcoin. So they're supporting the DeFi ecosystem. And I really think that they're sort of finding themselves in between the DeFi and the centralized exchange space. And I guess that's probably my concern with that project. But I do wish them all the best. Chromia teaming up with Hedgeit. So this is another decentralized options trading platform. Another theme we saw play out during the week was this DeFi on other chains. And this is all well and good, and there can be some great projects and great opportunities, but there still needs to be fundamentals. Just because you're, the link of another protocol or another country, it starts to remind me of, the Chinese Ethereum, the Korean Ethereum, and that led to rampant speculation and then rampant crashes. So if it has nothing to fall back on fundamentals, be aware that you don't want to get left holding the bag. And I think that this is something that people that missed out on, or the DeFi space, they want to be told that there's another project that's going to do 100x like Synthetics or Aave. But often the truth is that, there's not. That they are the best projects for a reason. So yes, there's going to be opportunities, particularly for flipping if you're more of a trader or a short-term investor. I think it's great that Cosmos and Polkadot and these other chains are launching, and there's some quality teams out there and a lot of funding from the VCs. But just be careful again of those narratives of this is the next hottest thing because it's a copycat. In terms of the space getting bubbly, we're seeing Evan Vaness and Alex is another friend of mine who have started to tokenize themselves, and these things are going 500% in 2 hours. So again, I'm trying to, play devil's advocate here, because I feel there maybe wasn't enough of that in the 2017 bubble. Carver Labs has partnered with BNB 48 Club. Again, Binance are really looking to crack into the DeFi space there. I thought this was a really funny story. Everyone knows the story about how the research report got put out by Zeus Capital, and it's almost like the community came together to squeeze the big short position they had on. And Chainlink's burst through even $10. What is it? I think it hit nearly $14. I mean, crazy stuff. Look, maybe we're due for a pullback after the community put all their effort into pushing the price of the coin up. But really funny stuff to see Zeus Capital, who tried to push price down, get squeezed out of their position. Good news for IOTA. They've been chosen by the EU as a key innovator in another funding program. IOTA's, I think, doubled since I said to you guys it was going to play catch up, which is fantastic to see. XRP sales have increased 19-fold in Q2 after a slow Q1. So I guess that's good news if you like them selling the XRP. They also had a big announcement here with IBIS adding Ripple connectivity to the Swiss route. So giving people the option to use Swift and Ripple in one platform. If they end up using XRP, this is definitely a positive development. One thing that people continue to get upset about is Jed McCaleb. So he is entitled to sell his coins $375,000 a day, and he has been doing that. Just something to be aware of. There's mine coins, whether it's Litecoin, Bitcoin, there's always someone that's selling, but obviously this is a larger figure the more the XRP price goes up. So just something to be aware of. This is the lawsuit between EOS's Block 1, and the judge is sort of saying here, look, I think the lawyers are just trying to milk this because they know how much money sort of Block 1 have. So all I wanted to mention here was I know firsthand, unfortunately, my parents went through a long divorce, and I saw that lawyers are always there to make money for themselves. And just something to be aware of as this one drags on. Are you really going to get a result? Is it worth going to court over? In the crypto space in general, so often we see accountants and lawyers charging a fortune to almost get educated on the space. So I just wanted to throw that in there as well. China's digital yuan is reportedly ready to go and targeting Alibaba and Tencent. Every week I stand here and talk about all these big institutions. Circle partnering with BCB Group, offering institutions stablecoin settlement in the EU. We've got Binance now looking to work with some New York banks, and the regulator, the watchdogs, given the all clear for that to happen. Goldman Sachs have joined JP Coin. They want to launch their own token, and they've got a new head of digital assets. Crypto Mum got reappointed, which is good news in terms of friendly SEC regulation. So definitely a tick there. And South Korean banks joining the US banks offering crypto custody. And we know how crypto mad the South Koreans can be over there. Russia's biggest bank also launching their own stablecoin. Coinbase is following Huobi and supporting the .crypto domain names. So Coinbase have been really friendly towards DeFi, ETH, and the .crypto domain. So in the future, you'll be able to pay, nuggetsnews.eth or nuggetsnews.crypto. I don't own any of those names, and someone else is squatting on those, which I thought was pretty funny. But no more long strings of numbers and letters. In the future, you'll be able to buy your own domain for a few dollars and use that for people to send and receive payments to. Another fantastic tracking tool here. This is seed-to-shelf cannabidiol tracking in Europe. One of the best use cases for blockchain. Look, VeChain continuing to make more partnerships, making food safer with Toolchain there. Coca-Cola embracing DLT. This is involving Baseline, Unibright, and Ethereum for supply chain. So really cool to see these household names breaking in and using Ethereum's technology. Polkadot have launched their testnet for sharding and cross communication. So this is the Cosmos, Parachains, Polkadots, that interoperability, which is becoming really important for other chains as Ethereum, I guess, grows its dominance. One chain that has been trying to work with Ethereum but keeps getting attacked, and this is the second attack in a week. So again, $1 million. It's getting to the point where exchanges are really going to consider delisting Ethereum Classic. And if this one wasn't so heavily supported by Grayscale and Barry Silbert, I would have thought that this had really gone the way of, Bitcoin Private or Bitcoin Gold, those chains that have just kind of almost died off to nothing. But anyway, Ethereum Classic is still going after 2 attacks. In terms of the top projects by development in July, here's the list there. You guys know that I've covered all these projects on the channel in great detail, other than probably Keep. Raiden is one that still doesn't get much attention, but it's consistently in the top 10 in terms of its development. Synthetics released another ecosystem update there. Look, they are just everywhere and working with everyone, which is fantastic. One of the best projects out there. Aave is the other one, and this week they actually issued their first loan that was done by that credit delegation I spoke about, where you can say to the protocol, well, I trust this person. They don't need to have an over collateralized loan, and we're starting to replace the traditional banking system, which is very cool. In terms of rating, I just wanted to mention the community points and the Reddit scaling competition. Head over and read about their update there, but they did manage to do 100,000 transactions per second. This is linearly scalable. So the point is here that if they get hundreds of nodes, they can get to higher numbers again, 250,000 transactions per second. Really cool stuff, and there's so many teams that are doing awesome things in this battle, this competition to scale Reddit points. A new one that launched was ZK Sync. So this is from Matter Labs. And I think, again, this is a combination of ZK Snarks and possibly sharding, or I might be thinking of another project. But guys, there's almost dozens of solutions out there that are going to scale Ethereum and the dApps very, very soon. Go had some more good news this week, talking about the difference between their more viable plasma and the minimal viable plasma. So upgrading, furthering that scaling there. And this is probably the most exciting piece for me that I wanted to share, Mana. So this is now probably one of the projects that tops my list. And I don't like to say that, I don't like to shield things too much, but this interview that I will make public probably on Tuesday for everyone, members got to watch this last week. This really blew me away about the virtual world that's being built on Ethereum. One that I've been talking about for a few months. I've been accumulating between 2 and 4 cents, and it actually jumped to, I think, 12 cents at time of recording, which is fantastic, fantastic news. Digital art, gaming, NFTs, that space in general I'm bullish on. Someone gave me a super rare for my birthday, which is really cool, and these things are starting to take off again. So it's that digital world of tokens, which I think is the next sort of DeFi theme that everyone's going to get excited about. Now, Nexus Mutual was my top pick at the start of the year because I thought that DeFi needed insurance, and that's now up over 1,000%. So again, well done to people that researched and got on that one as well. But this project is going to become more and more important because we're still seeing a lot of hacks and bugs in the DeFi space. Maker had to have another urgent vote this week. We've seen Open, another big hack. So this is the things that I'm sort of worried about. We continue to innovate at a fast pace, but with so much money sitting in DeFi, I do think we're going to see a nasty bug or hack sooner or later. So it's going to be interesting to see if that one is insured on Nexus Mutual when that all plays out. Set protocol. So these are the strategies that you can program into the different tokens. They've had a big upgrade this week. So head over and read that article or check out Anthony Sassano's Twitter feed. He's got a good thread that he did about all the changes there. The big news was Ethereum launching the Mandela, so the multi-client testnet. It did have a little bit of a finality issue. Once we had some more nodes online, that all played out fine, which is great news there. And US lawmakers don't want to overtax these proof-of-stake networks. So I think, again, some maybe Maximus are lobbying, trying to say, you need to tax these proof-of-stake networks and treat it like yield and income. But we've got Hester Peirce there, Crypto Mom. I think they want to take a friendly approach, and this is all really good news for Cardano, Ethereum 2.0, VeChain Neo, whatever it is. The staking coins, earning reward, they don't want to overtax those. A big step forward was Grayscale registering this trust to become an SEC reporting company. So again, just making Ethereum, like I say, Bitcoin and Ethereum are the blue chips because of all these reasons, all the regulation and certainty around them for big investors to put in big money. And Bloomberg now covering Ethereum and talk about the price rise being more speculative versus Bitcoin's fundamentals. I mean, I would probably argue that there's a lot happening on Ethereum fundamentally that's driven the speculation. But either way, mainstream coverage, it's just so funny to think about how far Ethereum's come in the last few years. Now, having said all that, I do want to go over these, and I know it's upset some people, and we do have maximalists that follow the channel. I love Bitcoin, I always will. It's played a huge part in my life, but it frustrates me no end when we see people like Adam Back, who should be, a spokesman for the space in general and freedom and a libertarian, but instead telling people that Ethereum and all these other coins are scams and Ponzi schemes. I mean, it's just rubbish, and Vitalik called him out on it. I tried to have my say there as well, mainly because I feel like they're becoming like bankers, telling people that they're so elitist, and it's my way or the highway. It's almost like the banking system. Well, ours is the best. What happened to competition and openness and people having choice? Okay, that is what really frustrates me about all this. And I kind of feel like since Bitcoin hasn't been developing quickly, I really think that it needs to work hard on all these technical improvements, and that is going to be exciting and add value. But they sit there and they watch all this DeFi stuff happening and all this other innovation. Ethereum talking about hardening its monetary policy where it would actually be more scarce in terms of stock to flow than Bitcoin. And I think they're getting worried and jealous and lashing out. Maybe I'm wrong, but look, this tweet did get a lot of traction because I really think it is embarrassing watching them just put out this toxic demeanor. And Bitcoin should be welcoming, and people there's even people in Australia that have these meetups and they tell you you're not allowed to come if you like or talk about another coin. Like, that is not what Bitcoin is all about. In the early days of the community that was open and accepting people and welcoming competition, Bitcoin was competition to other digital currencies online in the past, its predecessors. So look, I think that this is one of the few things that can be an Achilles heel. When you see people that are sort of trying to learn about Bitcoin and they log on and ask a question and get their head bitten off, or they get laughed at or memed at by these maximalists, who would have thought that some of the Bitcoin leaders in the space and the biggest accounts have now become the most toxic people in the crypto space? And look, you might disagree with it, but I really think it can negatively affect public perception, and Bitcoin would be way further along even if they just agreed and got along with Ethereum. Anyway, that's just my 2 cents worth. Let me know down in the comments below. Not only that, I just think it's so hypocritical when we've got people like Adam Back and Samson Mao now launching their own tokens and seed rounds when they've constantly ripped on tokens being scammed, and now they're doing it themselves. And we're seeing energy-backed, pilot programs on Rootstock, Bitcoin smart contracts. I think once even DeFi happens on Bitcoin, it's going to be a good thing. But if it happens on Ethereum, it's a bad thing. All those things are just so contradictory, and I just wish we could get rid of that out of the space. Bitcoin has actually a bug that needs to be hard forked out. Now, that doesn't have to happen for a very long time, but Bitcoin's had problems in the past. Ethereum, other chains, they're all going to have bugs and problems. So stop pretending that Bitcoin is perfect and picking on everyone else. I thought it was funny that the latest Lightning Network upgrade was called Rat Poison Squared on steroids. So good to know that Lightning is still being tinkered with and upgraded. But there's no doubt that DeFi has surpassed in terms of second layers and payments and the ability and the ease of use, the network effects of what it can do. In terms of investment, though, Bitcoin is still king. Look, Square reported a 600% increase in quarterly revenue. That's billions of dollars of profit. Something that I've kept saying is that no one wants to be first, but then no one wants to be last. So once these companies, this is a NASDAQ listed company, MicroStrategy, wary of the looming dollar inflation turning to Bitcoin and gold, openly, publicly saying that we're going to sit some of these $250 million in reserves that we have in Bitcoin and gold and other alternate assets over the next 12 months as a hedge against US dollar inflation. So just like we've seen individuals and then companies, now we've got publicly traded corporations, I think we're going to see countries, central banks and governments, once someone moves, they're all going to jump. And that's when they've got that printer. They can pay whatever price they want for Bitcoin or gold. That's where things get really, really interesting, guys. So when we have a quick look at the charts here, this is Ethereum. It's got over that sort of 375, 350 level I spoke about last week. We do have a few more levels of resistance around and under 500. If we get over there, there's every chance we can go parabolic. Bitcoin has done the hard work as well, getting over that 10,500 mark, which we kept hitting and bumping against. This represents that cup and handle, which actually gives us a target of up here around $15,000 if you want to take it from the bottom of the wick. The other level we were eyeing off was around 11,500 on these sort of weekly closes, and we couldn't quite close above there. Last Sunday, we had that really nasty sell-off. We are back above there. So if we can close above there, I think that's another green light. I'm watching gold and silver really closely. I mentioned the stocks as well. We've got the positive news out of Trump that he is going to be providing some stimulus. So now we need to wait and see if that is enough to keep the market happy, or if they are looking for that $1 trillion stimulus to be announced. If they get that, maybe stocks do break out to new all-time highs. And I mean, who would have thought that that was possible just a few months ago? So guys, that is everything for today. Please smash that like button, subscribe if you haven't already, share these videos with friends and family, head over to nuggetsnews.com.au if you haven't already, and I'll talk to you again soon. Cheers.